Good evening, everyone. Futures Brizio here. It is 5:40 p.m. on Friday, December 20th. Hope everybody had a great week, and hope you're getting ready for the end of the year and hopefully Christmas or holidays for you, New Year's, etc. So today, wraps up essentially what's probably the last real trading day of the year. I mean, obviously the markets will be open, but with Christmas coming next week, liquidity will drain out of the market quite a bit. So just be cautious if you're trading any new positions over the next 10 days or so until we get past New Year's. But because, like I said, there will be a lot less liquidity in the market, and we may see a lot of choppy sideways action. Might be hard to really get any trends going and sustain. So just be cautious. Don't try to force anything. But we'll see how it goes. Again, until after the new year, until that first full week afterwards, and things will pick back up again. I am traveling, so hopefully this recording comes out good because I don't have my office microphone. I'm just using the microphone on my laptop, so I'm hoping this is not a wasted video here. We'll find out, I guess, when I'm done. So let's just jump right in. I wanted to do a quick review of some trades I took this week in Forex, especially. As you know, I've been making several videos here about using retail sentiment in Forex, basically trading against the crowd. I'm not going to rehash it all again, but essentially it's taking the opposite position of what most of the traders are taking, especially when there's a divergence between where most retail traders are and where price actually is. And the wider that divergence is, the better potential position that you could take against the crowd. And so you can watch the last couple of videos. I've been talking about that. I'll review it as we go here, but I don't want to, bog this down too much. And like I said, the website that I've been using for this is this website here, forexclientsentiment.com. But there are other ones, like I said. You don't have to use this one. There's no magic about this. I just like it because A, it's free. B, you don't have to sign up, give any information, and C, I just like the way it shows graphically with the pink section here for the representing the retail net shorts, and the blue section which represents the net longs. Okay, and again, what you're looking for is a divergence. So you're looking for this ratio, long to short, to be at least 60-40 or 40-60, whatever, or better. So 60-40, 65-35, 70-30, you get the point, right? If it's anything inside of 60-40, so if it's 50-50, 55-45, I just skip that pair. Okay, so I'm looking for wide divergences where the retail traders are at an extreme in terms of their positioning versus where the market actually is. So 60% is the minimum, 65 or better is actually, like I said, even better. But I think at least 60 is good. So I want to just review 3 quick trades. And I will tell you, this was a tremendous week for this methodology. Well, I hesitate even saying this, but I will tell you that I increased my account 50% this week. Now, before everybody flies off the handle, look, that's 1 week, and next week I could be down 20% or 30%, hopefully not. But I was up 50%, and this is the only method I traded this week. Okay. And I did have a couple of, some losers, nothing big. My losers were very small, but I had a few really nice winning trades. So I just want to review those with you and just talk about it. So the first one we're going to look at is the New Zealand dollar Japanese yen. So here is the trade. You can see I entered this on the 18th, which was 2 days ago. Let's see, 1630. So that's about That's about, let's see, what time is that on this broker? I always forget now. Sorry. So we are, it's 23 minutes, so it's -7. So that's around 11 a.m. This was around 11 a.m. I entered this trade. Okay. Um, and you can see I got in here and I got out down at this bottom. Now the price has since rallied, so this was obviously a very good place to exit. And I exited when I saw this higher low put in down the bottom. This is the 30-minute chart, by the way. And so, and I entered here on, we had this pullback, and then I entered as soon as I saw this liquidity sweep price started going down again, this was my entry point. But why did I enter it? Okay, so if we look at the New Zealand dollar, Japanese yen sentiment chart, you can see here now the sentiment has come back a little bit since then. So this is not a setup I would take now. But at the time on the 18th, let's see, where were we on the 18th? Again, guys, I'm sorry, I'm on my laptop without my monitors here. So on the 18th, we were at 66% long, 34% short. Okay, so in other words, most retail traders were long. Okay, 60% or 66% were long. So that's within my range. So I was only looking for shorts based on that. And so that's why I took this trade. At the time I came to my charts, we had already started this downtrend. I was waiting for a pullback, which the other thing I told you guys on these videos is that these are daily candles. And so this is really where your analysis should start as you look for pullback areas, good areas to enter the market. Don't just enter this blindly just because there's some divergence in the, just because you see some divergence in the sentiment. Like you don't want to, if you're going to go short, you don't want to buy, after a big bearish daily candle. Now, it very well may go down the next day again, but it also could be a significant pullback. And if you're entering on a shorter time frame, your stop loss is probably going to get hit. So I always wait for some kind of pullback. In this case, I'm waiting for a bullish, blue candle pullback, at least one candle, but, a couple, 2, 3 would be even better. Once I see that pullback's forming, then I'll go to the shorter time frame down to the 4-hour, the 1-hour, and I will just wait for the bearish sentiment, the bearish momentum in this case to start up again. Okay, so on this one, on this time frame, we saw this downtrend starting from the last correction. You can see the price structure was taken out. Here was the last structure area, went up, made this high. So the ideal place to have entered this would have been back here, okay, because you would have, here was the structure break on this short time frame, and you could have rode this all the way down. So I didn't get in back here. So when I finally came to the chart to look at this, I said, okay, well, I'm going to wait for another pullback. So this low was put in, and we came up, we came down, tried to go lower, we didn't. Came up again, swept this liquidity, but this entire time I was still very bearish because of the sentiment, even though this looked like, oh, maybe this is going to be, a higher low here, or it failed to make a new low, and now we're going to start going higher. We took out this swing with this high. Now, again, this is a short time frame. This is only a 30-minute. But I never looked at this as going long. I was only looking to go short. So it finally came when I saw price sweep, and then I probably actually entered on an even shorter time frame, probably on like a 5-minute down here on a structure break. Let me just take a quick look at the 5-minute there. Where's the trade? Okay, yeah, here's the trade on the 5-minute. So here was that last little corrective move. So price came up, then we came down, tried to come up again. Then as soon as we broke structure right here, broke this little low on the 5-minute, that's when I entered, okay? And I rode the trade all the way down until, again, we put in this higher low, and that's my signal to get out. Now, on this particular pair, we are now, as of today, we're at 58.42. So the bullish sentiment has come down a little bit. This is no longer in my on my watch list as long as the sentiment. Now this could turn and go back, and that 58 could go back into the 60s, and then I'll add it back. But By my rules, the Kiwi yen is no longer on my list just because of this, right? Because right now, as of today's close, we're at 58.42. Okay, so that's not on my list anymore, but I did want to show you the trade. Okay, so let's move on to pound Swiss. It's the next one I want to show you. So again, let's zoom out to the daily. Okay, and actually let's go over to our sentiment chart first. Pound Swiss right here. All right, so what do we have here? 85% currently, or 84% long. So what am I looking for? Shorts. 85% of the retail traders as of today were are long. So I'm only looking for shorts, and that's been the case. So we've been way up here, and at 80% or better here for a long time, for at least 3 months. Okay, so if we go to that chart, and let's drill down a little bit to the 1 hour chart so we can see exactly when we entered here. So again, not a perfect entry in terms of how much we left, but this was on the 19th, which was yesterday, early yesterday, 1500. So that was right around the New York Open that I entered. 1500 is the New York Open for me, and so and you can see I got in there, got out here. I had a trailing stop. I got taken out on my trailing stop on this little blue candle, which was kind of a bummer because it did keep going down a little bit more, but I was in front of my chart, so I had a trailing stop set, and I knew I probably would get kicked out on it eventually, and I did. The price did go down for another, let's see how many pips I left here, just to torture myself. About another 39 pips it went down before it bounced. Now, as of right now, so we had this big push back up on the hourly chart. This is probably already set up for another short position. You can see this big pullback here. So if we drill down a little bit further, let's just look at that. All right, here's the 15-minute, here's the 5-minute, here's that pullback on the 5, okay? We had a little Folio one right here, right, where price broke structure, had this bullish, this bearish candle here, and price went back up. So, if you tried to get in right here, this probably wasn't great. Depending where your stop loss was, you may have gotten stopped out. Continue to go up, and now we've broken structure. This to me is, the larger structure. The first decent sized structure area was right here. We took that out, and price is going down. Now, if you want to really be conservative, you can come back to this area here, but this area has already been kind of mitigated. So we could see a little bounce here on the 5-minute, but either way, I think the pound Swiss is going to make another run down here, just based on the sentiment and based on what the market looks like right now. Now, obviously, the market's closed now for the weekend, so nothing's going to happen now. And again, with next week being Christmas week, I don't know how volatile things will be, but I think at some point this will continue its downside push. Okay? So that's the pound versus the Swiss. All right. And 1 second, guys. Okay. So now the other one here is the Swiss yen. I'm not even a big fan of Swiss yen, but this setup was too good, so I had to take it. So let's first look at the sentiment chart. So I got having coffee. Let's find it here. And again, I would normally have this blown up big on my other monitor, but I'm only running off my laptop here. All right, here's Swiss yen. Okay, so what do we have? We have the market heavily net short. It's been running, 70, 80%. It's actually been falling all week. So as of the close today, we're 82% short. So 82% of retail traders are short. So what does that mean? We're looking for longs, okay? So I got into this trade, I think this was like 2 days ago. I got into this trade this was on the 19th so this was actually during the Asian session I got in, which I don't trade a lot of Asian session, but this was at like 8 p.m. my time, which was about 3 hours into the Asian session. And, um, especially because it was a yen pair. So if we look at we go out to the daily first, you can see we actually were in an uptrend even leading into that. This was the first kind of sideways pullback in this uptrend. And so I went down to this shorter time frame, and basically, we had all this sideways action, and then I went down to an even shorter time frame, and basically what I was looking for here is a higher low to be put in, and I just entered. So we had put in this little swing, and we went up, put in this little sweep, and then it started going down again and failed to. And then as soon as I saw this candle, you see I got in on this very beginning of this bullish candle. And it's a very low risk trade, guys, because you can see prior to me getting in, price was kind of, here we are down here, right? Price was moving sideways, all right? We had this push down, but you can see right here, right? So we had this last bit of corrective move here. Price was going up. It never took out all of this. So, there was no entry here because it never took out this previous swing area here. So I just kind of ignored all this. And then price went down. And again, I was never looking for a short here. So it didn't matter what it did to the downside. It came down here. It swept out liquidity below these lows. You can see these wicks. It took like 3 or 4 attempts to go lower here. Swept all this liquidity. And then we had this bullish impulsive move up. We put in a higher low right here, and that's where I entered. I said, you know what? I'm getting in right here. It's a low risk trade. I put my stop right below this low, but if I'm wrong and it keeps going down, fine, I get taken out. It's a small stop loss. It was, let's see, that would have been like, it's about a 60 pip stop loss, which, on an hourly time frame, it's not a terrible stop loss. I mean, I know some people that sounds high, but it all is in your risk management, how much you're going to risk. So, yeah, that's what I did. And so I got out right here, and honestly, I could have held it longer. You can see this little red dot. So that means I had a trailing stop because this was my original stop loss. Originally, that little red dot would have been down here. And then I was managing the trade again. I set a trailing stop and I got swept out like I did on that pound kiwi. And I got swept out right here. Now price did run up a little bit more, but that's okay because it came right back down again and it was kind of moving sideways. Although I do expect this to continue to go up at some point. It is on my watch list because the sentiment is still very balanced, very unbalanced to the downside. But we'll see. This is really choppy. I would love to see a deeper correction, but at some point we may start turning higher again. Who knows? Maybe this was a higher low that was put in right here. We'll keep an eye on it next week, but you can see it was a nice trade. Plenty of pips here. We had very impulsive moves overnight, and then things did take a little pause, and then it made one more push up before it entered into this consolidation phase. So again, this may have been a liquidity sweep right here under these lows. Then we went up, put in a higher low here. Maybe we're going higher. So I may start to look, go down to a 5-minute chart. You can start to see we're putting in, higher lows, higher highs here on the 5-minute. Not very impulsive though, but I'll keep an eye on it. If I see something like really start to point to higher prices again, then I might jump back into this because certainly I think there's some more room. The next real big overhead resistance is up here, which is still pretty far away on the daily chart. And if it gets through there, then we've got this area up top. Sorry, guys, I got to pause the video again. Be right back. All right, sorry about that, guys. I had a phone call. I paused the video again. Okay, so what was I saying? Yeah, so I do think that Swiss yen probably will make another run up, but I'd have to see some better price action than that. Just look at a couple that may potentially have setups coming next week. I have quite a few flagged. I'm not going to go through them all. The video will be way too long. I'll just look at one or two anyway. So let's look at dollar Canadian. So here's our sentiment chart. This one is one of the better ones that I can see. So what do you see right here? We have only 20% of the market is bullish. 80% bearish. So what are you looking for? Long positions, right? And if we see the current setup, we had this impulsive move, and then we've had 2 days with the price pulling back. So to me, this gets this pair on my watch list because, we've had 2 bearish. It doesn't mean we won't have more bearish days, but as soon as I start seeing at least 2 bearish candles on these pullbacks, although sometimes you only get one, like this one right here. Although technically, no, this was actually all part of one big kind of pullback. But you want to see obviously a minimum of 1 bearish candle pullback, but 2 or 3 is even better because the deeper that pullback goes, potentially as long as the market structure doesn't change, then the more better risk to reward ratio you have back to the upside. So clearly we're looking for longs. We've had 2 days of pullback, so now that's going to make me go to the dollar CAD chart here and just take a look. So here's dollar CAD. I was looking at this earlier, so I'm on the 5 minutes. So let's just zoom out. So there is our daily chart, and there's those 2 bearish days we've had, right? 1, 2. Okay. Go to the hourly chart. We've had this nice pullback here. It's just been trending down, trending down. We've got basically, an area, pullback area that runs, inside of here. So I'm looking basically now for a shift in momentum. This might be it right here, although I don't know, because we had price come down, make a low, go up, make this fake breakout. Came down again here, swept the liquidity right here below these lows, and then started going up again. So at this point, then now I'm going to start looking for a shift in momentum. So here's the 15-minute. Here's that sweep low. Price went up, came down, tried to come down, put in a higher low, and then went up again. So this actually might be an area that you could potentially enter in now. I'm not saying you should. Use your own judgment here. Here was that false break. I just want to show you because, sometimes you're just going to be wrong and you're just too early. So we did have this area right here. This was that first big pullback. Okay. Then we had the shift of momentum. So basically anywhere from this higher low up through here, any of this would have been a potential area for a long position. Now, if you had taken this, you actually would have gone into some profit. This is only a 5-minute chart, so this isn't particularly long. It's only a few hours of price action. And then price came down. Depending where you had your stop loss, if you let it come all the way back down, you probably got stopped out because you can see it swept below these lows. So depending where your stop was, you got stopped out of this. Now, if you had put your stop maybe, if you look a little further to the left, this was the big low. But this was the last low that was put in before this giant bull candle. So if you put your stop loss over here, right at the left edge of my screen here, right there, then this wouldn't have swept you. So it's not that this was a bad entry. It's just that it came all the way back and swept some liquidity. But either way, I do think that, even if you got knocked out of here, that this is potentially a new opportunity. So bottom line is I'll be looking for dollar CAD longs on this. Okay. Let's see. I just want to maybe show you. I think I want to look at. Yeah. Okay. So I'm going to show you Euro Aussie because I'm actually in this. I left these running for the weekend. Okay. So first, again, let's just go to our chart here on the Euro Aussie. Just gotta find it. Yeah, this is a little bit of a pain. There it is right there. What's the it's Euro CAD. Okay. Euro Aussie. Okay, what do you see here? You see sentiment down here at like 75% short. Okay, so we're looking for longs. Okay. So with that in mind, we go back to the chart, go out to our daily. All right. And you can see we put in this. I gotta zoom in. Unfortunately, MetaTrader only has like daily, doesn't have a lot of time frames, so it's not like MT5 where you can like do like daily 12-hour, 8-hour. On MT4, you just don't have that option. That's what my broker uses. So here we are right here, and so we've got price went up, came back, had this candle that went up, made a high, and then had this big pullback all in the same day. This was yesterday, the 19th. All right. And then I said, well, you know what? You go down to a shorter time frame. Here was that pullback. So it went up, made a high, came all the way back down, swept the liquidity below this last swing before this high was put in. This was the last swing low before this run up high that was put in. Okay, on that, and then that's where that bearish candle formed, basically from here to here, that daily bearish candle. And so price came down, swept right below it. Okay, and this is just so classic where they dump the price just below this swing low. They take out all the people who are sitting with stop losses below this low. Maybe they were in profit. They let price come all the way back down. They sweep them out on this bearish candle, and then they run price up. So I entered on this pullback, so I waited for the kind of the price momentum to shift. So we had a push back up, a higher low put in, broke structure, came back again, and then that's where I got in. You can see the position I'm in now, and I'm just going to let this run. But it was all again based on the sentiment, and then just waiting for market structure shift. And you can see my take profit is up here at these weekly highs up here. I just tried to find a place. We had this huge wick here on the weekly chart. I'm not going to let it because there's probably not a lot of volatility or a lot of volume up here. So I don't necessarily want to push it. I'd be happy even if it just comes back to these highs right here. So that's where my take profit is set. But you can see it's a pretty good risk to reward ratio. Just eyeballing that, it's probably about 4 or 5 to 1. So that's, that's pretty good. Okay. So that's one that I'm in right now. All right. And I'm holding through the weekend. So we'll see. Hopefully I don't get nailed with some, geopolitical nonsense over the weekend. I'm always a little nervous about holding through the weekend, but I'm confident enough with it. And I've got a, I don't have a huge position size on it, and I don't have a big stop loss. So, okay. And so the last one I guess we'll look at here is Aussie dollar. I think that's the one I wanted to show you. Okay, so let's jump over back to sentiment again. Find Aussie USD. I think pound USD is another one, but I think they're about the same chart anyway. So, okay, Aussie Can, Aussie Swiss, Aussie Kiwi. Where is Aussie dollar? This is so tough, guys, not being at home. There it is. Second to the last one, of course. Okay, so Aussie dollar, what do we have here? 85% long, 15% short. So what are we looking for? We are looking for short positions. You can see what happened 3 days ago. We had this big bearish dump. Price went down, closed near the lows, and now we've had 2 days of small, low volume, double wick candles going back up. So again, this catches my eye, and that I'm potentially looking for eventually for this to dump again. So with that in mind, we go back to the chart. Here's the daily. Here's those two small bull candles, right? That's what I just showed you on the sentiment chart. Here's those two small bullish candles after the new low that was put in. You jump down a little bit lower time frame. Let's jump to the hourly. And here's the hourly. And it looks like we have had that change of momentum, right? It actually probably started back here. I'm looking at so many different things here. I'm going to miss some of these, but there's plenty of room. If this does start to run back, I'll get plenty of room to run to the upside. So don't have FOMO on these, especially when you have the sentiment in your favor. So we put in this low, we put in a higher low, went up again, pulled back again, back down to this low, which held, ran up another bullish candle, pulled back again, ran up again, pulled back again. Okay, so now if I go down to a 15-minute, here was the last, this was the last pullback before this high was put in. So this is a potential area. If we get a shift in momentum now back to the upside, this is, somewhere up in here, I'd probably re-enter. If it happens to break lower, then, it could come back down to this area because this was kind of the pullback area on a little bit longer time frame. Like on the hourly chart, you can see this was a little bit deeper pullback. So as long as this area holds, I'm fine with this. because you can see there's no, on the hourly chart, there's no bearish pullback here that you can see on the candles, but there is one down here. So I'm not going to rush into this, but if it comes down here and breaks through here, I'll be perfectly fine and I will wait. I actually prefer if it comes further down, because that would be a better risk to reward ratio, because I would enter in here, put my stop probably down below, way down here, and then just let this thing go. So I'm not going to be like I said, rushing to get into this thing, okay? But if on the 15-minute chart, I do see, that, I see a big bullish engulfing candle, and maybe we start to take out some 5-minute structure, then I might consider jumping in at that point. So, but I do expect price to come back down at least a little closer to this yellow line. But again, if it breaks through and it comes down even further, this is the deeper level of support I just showed you. Okay, here on the 30-minute and the 1 hour down here, that's what I'd be looking for. And then I'm just waiting for a shift to momentum back to the upside, because we're only looking for long. So I don't care what it does to the downside. Just let it go. And the deeper it comes back, the better my risk to reward opportunity to the upside when that happens is going to be. So that's just another one. And like I said, I'm looking at my list. 1, 2, 3, 4, 5, 6, 7, 8, 9. I have 9 pairs that are potentially close to setting up. I just showed you 2 of them. Dollar CAD, Aussie dollar. The other ones, I'll just read them off. New Zealand, US dollar, dollar yen, Euro GBP, Euro CAD, Euro Aussie, maybe even Euro Kiwi, so that would be 10. But Euro Aussie, Euro Kiwi are very similar. Pound Swiss I talked about when I showed you the pound Swiss, so that might be setting up for another move back to the downside. And pound Canadian, okay, and the Aussie dollar I just showed you. So that's like 9 or 10. Those are the ones that I think are closest to being ready to resume the trends in the direction that it's showing on the sentiment chart. There are a bunch of other ones that I have that are on my watch list, but they're not. There's no current or impending setup. Okay, so I'll just keep watching them, but they're already on their way, basically in the middle of an impulsive move, and I'm not going to jump on them. Then I'll wait for a pullback. So, all right, but those 9 or 10, that's tons of opportunity. It's 9 or 10 pairs that you can be watching. Some people only watch 1 pair, so there's 9 or 10 that might have opportunities. You don't have to trade on all of them. You don't even have to look at all of them. But those are the ones that, for me, based on this methodology, are the ones that I'm looking at. Okay? So I'm going to leave it there, guys. I hope that was helpful. Just going to continue this series. In futures, it really was very little today, so I don't think I'm going to make a futures video. The markets were really choppy today. There were a couple of short impulsive moves, but unless you're scalping, there really was not much in the futures market today. So as far as I'm concerned, not in the ones I look at. So I'm probably not going to make a futures video today. I'm just going to make this one on these Forex sentiment trades and just leave it there. But it was a really good week, and like I said, I'm under no illusion I'm going to increase my account 50% every week. This was just a really good week, and that's fine. I'll take it, and I'll just be cautious with my risk next week, and hopefully just, continue making some good choices here. So questions, comments, leave them down below, guys. Make sure you like the video, subscribe to the channel. I look forward to speaking with you next week. Have a terrific weekend, and like I said, leave the comments down below, and I'll talk to you all soon.